Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Real estate is an amazing, amazing opportunity for you to invest and to create wealth, and it can get emotional at times. Is that good or is that bad? The answer is yes. We're going to talk about your emotional drivers today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, co-host financial strategist Russell Gray.
Hey, Robert.
You know, we love talking real estate. We love getting around big brains. And my goodness, the last few weeks we've had some incredible guests. That is going to continue as we have two amazing guests today. But we've got a really interesting topic. And it came up as we were interviewing these gentlemen, kind of on and off the mic. And this idea is that we are emotional creatures. As human beings, we're emotional creatures. And yet, sometimes in real estate, we don't let our emotion serve us. And there's two sides of it. On one hand, you've heard it say, we'll never get emotionally attached to a real estate deal. It's all about the numbers. It's all about the return. And a big mistake investors make is they get emotionally attached to a property. On the other hand, sometimes you get so desensitized that you don't honor your emotions. And one of the great skill sets in real estate negotiation is empathy and understanding and reading a room and those kinds of things. So I think we're going to have a lot of fun with today's topic.
I do think emotions play a huge role. You know, just basic investing, any investment, people will talk to you about the two emotions, greed and fear. But it's a lot more than that, although fear is really, I don't know, I think both of them are probably real strong. Greed makes you go in and chase a deal. Greed makes you go in and maybe overbid or get anxious and abuse people who are in the transaction because you're getting selfish, you get greedy. On the flip side of that, fear will get you to go in, and really I think greed is a byproduct of fear, if you will, because you're afraid there's not enough. It's scarcity mentality. But the other part of fear is fear you're going to lose, fear you're going to make a mistake, and then when you get in, that's what keeps you up at 2 o'clock in the morning and you can't sleep. And so the learning how to manage your emotions is a lot like learning how to manage your intellect, if you will, right? You have to spend time to understand the process of whatever it is you're trying to do, and you have to understand that inside of you there are things going on that are pulling at your logic, and you begin to see things, jade things, if you will, the way you want them to be. I mean, simple example is you're looking at a deal and you decide, hey, I really want to do a deal because I need to do a deal because I feel like I haven't done a deal in a long time. Market's not giving me a lot of great deals. And so you begin to move your standards a little bit, and then you begin to lower them. And then you start looking at the pro forma and you think, okay, I can make this deal work, but I just need a little bit here, a little bit there. And so rather than go get the data and have the market tell you what's really there, you begin to fudge it a little bit and you begin to make it try to fit into the box that you want it to fit into. And you know, the thing is, when you're moving numbers around on a piece of paper, if you're modeling with data that is actually factual, that's great. If you are moving the data to fit your model, that's a problem. What causes that? Your emotions. And so learning how your emotions affect your investing, learning the importance of how to control your emotions and not let them get the best of you, but make them serve you, is really an important investor skill set.
Well, emotions are critical. I mean, when you buy your home to live in, think about the time you bought your first house. Or if you haven't done that yet, imagine going out to find the home you're going to call home, the place you're going to lay your head every night. This is your house. there's a lot of emotion there, right? When you look back at houses you've lived in, places you've raised your kids, a place you first fell in love, there's all kinds of emotion around real estate that can serve you well. When I'm looking for a primary residence or secondary residence, it's all about emotion, right? How does this place make me feel? Am I going to be vibrant here? Am I going to be productive in my new office space? At the same time, when we look as ROI investors, we want to be detached as we can. If the deal doesn't make sense, to your point, don't fudge the numbers. Hey, this one doesn't make sense. It doesn't work. But you have to manage that. And we as emotional beings aren't always good at recognizing when we're going down a path based on the way we feel.
Well, it gets even more complicated because the marketplace is full of emotional beings. And so now you're out there competing for deals and doing deals in an environment where there's other people out there with emotions. And so there's some economic uncertainty right now. We're in the middle of a very, very controversial election cycle here in the United States. We know there's going to be a regime change, if you will. We know that there's going to be a new political environment. That creates uncertainty. We know that the Fed just raised interest rates last December, 25 basis points. The stock market threw a hissy fit. Fed keeps coming out saying they want to raise interest rates. They seem unable to do it. What is that saying? So there are people who are speculating that maybe the economy isn't really recovered, isn't really strong. Then other people say, well, we've been in a recovery, quote unquote recovery, at least as far as the stock market is concerned, for a very, very long time. And these things have cycles. And at some point, we ought to be moving into a bear cycle. Gold is saying some things about what's going on. It's a reflection of the emotions of the marketplace. People begin to get afraid. You hear risk on, risk off, right? People are coming into gold and they're coming into bonds, which are considered safe haven assets. Those things are telling you about the mood of the market. For those of you like us that were in the marketplace in 2008 when everything fell apart, I know personally the emotions I went to. The first emotion was shock. Then the next emotion was denial. Then I went into depression. And then I finally began to figure out, okay, this is real and I'm going to have to deal with it. I have to get over all of this anger about what I didn't know or who did this. I mean, we had people angry at us. We were angry at people. There was a lot of emotion. And eventually it wasn't serving us. I mean, I remember sitting down going, you know what? It's interesting that we should have known this, or it's interesting that somebody should have done that. It's interesting that the Wall Street guy screwed the pooch, whatever. It is what it is. Now we just have to deal with what it is. We have to put it back together. We have to get the lessons. And when we finally lowered our emotions, we were able to begin to make more rational decisions. Blair Singer teaches all the time, when emotions run high, intelligence runs low. Yeah. And so the flip side of that is if you can keep your emotions under control, then your intelligence can actually engage. And your emotions are important in driving what you do, but your intelligence gives that motion direction and form, and they work hand in hand. You have to balance them. It's a balancing act. It's not easy to do, but it's important to know that you need to do it. You can't even work on something you don't even know is important, and that's really the essence of today's show.
Well, and the first thing is awareness, being aware of when you are starting down an emotional path. I remember we were looking at buying some land at a land auction, and a partner and I went in there and we had the talk. Listen, we're looking at this parcel. Here's the maximum we're going to bid. We done our numbers. We knew what we could pay for this parcel. We weren't going to pay any more than that. Okay, that's logical. We get in the room and it is a frenzy. It's a hot market. Things are going on. The bidding starts. We bid. Somebody else bids. Before you know it, my partner's hand goes up at a price higher than we agreed. I'm like, hey, I elbow him. We're above the, no, look, let's go. Look how many people want this property. The emotion took over. So it's easy to say, oh yeah, I can be unemotional when I need to. But I think you're right. The first key is to just notice, be aware of yourself and how you're feeling through a transaction. It's not just a real estate transaction. Any negotiation we have, when you're going to negotiate with somebody, and by the way, negotiation doesn't mean that someone's a winner and someone's a loser. Negotiation is figuring out the best path forward for two parties. And great negotiations, everyone feels good about at the end. So you're not adversarial in a negotiation, but many times you're right. Emotion runs high and intelligence can run low.
Well, if you're negotiating with somebody who is a little irritating, sometimes you want to stick it to them, and sometimes you want to stick it to them at a price. And it's a price to you. You say, you know what? I don't care. It's worth it. I just want to stick it to them, right? That's not healthy. That's not good. But it's easy to fall into that temptation. It's easy to want to get even. It's easy to want to take advantage of somebody given the opportunity. I mean, that's where greed kicks in. So again, the concept of emotion is understanding what's going on inside yourself. It's understanding what's going on across the table. It's understanding what's going on in the overall economic environment or space or marketplace that you're operating in. And the idea is that you want to make your emotions serve you instead of the other way around. That's really the key. And when you get a chance to hang around with people that spend a lot of time studying markets, talking to investors, investing themselves, they give you pearls of wisdom. They give you insight. They give you understanding of the nuance of how important that is. And so, we had this topic come up. We thought, this would make a great show because, most of the time it's about the nuts and bolts. It's about, well, how do you calculate a cap rate and what is the due diligence process for this and that and which markets do you like and why and what macro factors are creating demographic movements and blah, 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 blah. And all that's important, right? But emotion is a big part of it too. It's like when you talk to people who are analyzing stocks and talking about the directions of markets and they start talking about the mood of the market and investor sentiment and consumer sentiment and all of those different things. The reason these professional investors manage sentiment is because emotion rules what people do, and you can't project or predict what people are going to do if you don't take the emotional side into consideration.
So let's talk about the other side, and that is when emotion can be your friend. If I'm a landlord, I don't want to be dealing directly with my tenants because I don't want to get caught up in the drama, their story, the emotion. At the same time, I need to have empathy. These are my clients, my customers. The reason we love property managers is they put that buffer between you and the tenant, and the property manager generally is not emotional. It's not their property. Now they have the same incentive you do, and in other words, they're on the same side of the table. They make money when you make money, but their approach is a little different. And so that's a great way that you can put a buffer in. When I create a property experience for a tenant, I want access to my emotions. What's the tenant going to feel like when they walk in? What's going to draw them in? What are they thinking about? They've come home from a hard day at work. What's going to give them comfort? All those kinds of things as they're looking at other properties so I can be competitive. In design, in real estate design especially, some of the designers that we work with are some of the most emotional people on the team, and that's good. That's what gives them the insight into the way that people behave and what they like. As we travel around the world, I mean, you can just see how real estate can bring out positive and negative emotions based on its design, based on its location, all that stuff. So emotion isn't all bad. You need to just be aware of it and then use it for good.
I always say motion comes from emotion. And if you want to move things along, you want to move your project along, you want to progress, you want to advance your life, you want to take effective action, the emotions are going to be the fuel. They're going to be the energy that makes that happen. And so, yeah, you definitely want to learn how to manage them and manage the emotional environments as you're in. And it all starts with understanding them on the front end. So, again, that's super important.
So I think your exercise today is just check your emotions as we go through. We've got a couple of guests today, and I'll tell you what, we did these interviews before we really had our mind around this show topic, and both of these gentlemen made a similar comment, and that really got us to thinking about, wow, how important is emotion? Chris Martenson has a brand new book with his partner Adam Taggart, and it's called Prosper, and he talks about the various types of capital. He's going to explain that to us, but one of the types of capital is emotional capital, and you have to think of it that way. This is your reserve of emotion. You use it sparingly. When someone's upset, you've got to be empathetic. You've got to understand the emotion, but you can't get drug into it. If you come across a drowning person, the last thing you want to do is get near that person because they're going to pull you under. Instead, you have to step back and go, no, wait, I need to find out how to save this person from themselves because they are not rational. We deal with a lot of people that aren't rational. And so as a real estate investor, as a human being, keeping your emotion in check and recognizing emotional capital is critical.
If you're a new investor and you weren't really investing through the 2008 financial crisis, I'd encourage you to go find some folks that were.
Yeah.
Because you learned a lot. I've said many times, Robert, that one of the best gifts that we were given was that crash.
Oh, you bet.
My marriage was tested. Your marriage was tested. Our partnership was tested. We found out who our friends were and who weren't. We saw how how people responded to adversity. We saw how people acted under pressure. And, if you're out there, especially syndicating, if you're raising money from investors and you guys are going through deals together and something goes sideways, or actually say, not if something goes sideways, when something goes sideways, because things always go sideways, you're going to find out who is rational, who is willing to go through and understand, hey, I took a risk and I accept the risk and I'm going to go through, let's find a solution to this together. And then other people that are just blamers, they want to throw you under the bus. Now, everybody has to own their share, right? But that's important. But it gets to the point where it becomes counterproductive. The purpose of analyzing a problem or a mistake is to figure out what can I learn from it and how can I move forward. When it's just to get even, when it's just to vent, when it's just to inflict pain because you're hurting, you've crossed the line. You've gone from a productive lesson to something unproductive. And as I shared earlier, 2008 was a real learning process for me as an investor and a business person to understand my own emotions. It took me a lot longer to snap back than it should have. And I'm a little embarrassed about that. I spent probably 2 or 3 months in the doldrums, just not wanting to engage. I went into lockdown. There were problems happening around me. I didn't want to engage with them. I just wanted to pretend it would go away. It was that denial phase I went through. But today, I feel like I'm a better business person. I'm a better investor. I know who my best friends are, who my best partners are. I understand, I think, a lot better how to go through a difficult time. And then when you listen to a guy like Chris, who has built his whole program, on crash course, preparing for the next crash. We hang out with somebody like Peter Schiff. Hey, the next crash is going to be bigger than the last one. I don't know if that's going to happen or not. The only thing I know is I want to be ready. And being ready isn't just what's on my balance sheet, but it's also who's in my Rolodex or my relationship, who's on speed dial on my phone, and what's my relationship with me. And am I ready to go through something like that? And I'm spending a lot of time right now preparing my family. I think something difficult will come. And when I say difficult, I don't mean difficult like impossible. I don't mean difficult like destructive. I mean difficult like it's going to be a lot of change in a very short period of time. There's going to be a lot of opportunity for people who are prepared and of the right mindset. And there's going to be a lot of disruption for people who are not prepared and are not of the right mindset. So this show is about encouraging you to get on the side of being prepared and being of the right mindset and building the right relationships. And part of that is listening to people who study the topic and have seen a lot. The 2 guys you're going to hear from today are 2 guys that are doing that at a very, very high level. 2 of the most respected thought leaders in the space. And to bring them both to you in one show is just amazing. And we were so very fortunate. They were gracious with their time. We were able to spend some time with them. I learned a ton just listening to them, and you're going to love the things they have to share with you.
And this is going to be a great opportunity for you to check your emotions, because they both have feelings and ideas about where the world is headed, where the market may be headed. And I don't know where you think about all that stuff. And again, check your emotion as you're listening, but super excited to have billionaire Bill Bonner with us. And when we come back, Chris Martenson, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Are you ready to profit in paradise? Hi, it's Robert Helms, and if you think real estate investing means tenants, toilets, and termites, think again. Located just a short plane ride from the U.S., a virtually untouched paradise awaits, the beautiful country of Belize. When you go to Belize with the Real Estate Guys, you'll spend 4 fabulous days discovering one of the most intriguing real estate markets I've ever seen. With its jungle rainforest, pristine beaches, and 81-degree turquoise water, Belize is one of the most beautiful places on earth. Plus, it's considered one of the top 7 tax havens in the world. Belize property is on the rise, and many experts think the best is yet to come. But don't just take my word for it. Come experience Belize firsthand at our upcoming investor field trip. When you join us, you'll discover the many reasons we love Belize, like tremendously undervalued beachfront land, super low taxes, ease of doing business, and so much more. Get the details at realestateguysradio.com. Just click on events. See paradise for yourself. Click events at realestateguysradio.com, and I'll see you in beautiful Belize.
Hello, I'm Robert Kiyosaki. Listen to the Real Estate Guys. They're wild and crazy, but they really know what they're talking about.
Welcome back to the Real Estate Guys radio program, the number one downloaded podcast on real estate investing. Speaking of podcasts, we're going to meet a guy who does a great podcast and a whole bunch of awesome stuff, too, from Peak Prosperity and the author of The Crash Course. Let's say hi to Chris Martinson. How are you?
I'm very good, and good to be here with you and your listeners.
Yeah, absolutely. Well, we've been wanting to have you on the show for quite some time, and we're going to talk about your new book, which just come out. But first, there's so much going on, and you keep your head in a lot of spaces, right? You pay attention to oil, gas, gold, commodities, all kinds of stuff. Where are we, man? What's going on?
I wish I knew. The level of confusion out there, Robert, I get to interact with hedge fund managers, people who've been in the business for decades.
Yep.
Whether you've been in the business for a week or 30 years, the confusion's enormous at this point. Listen, we have stocks at all-time record highs. We have bonds at all-time record highs, right? The only way I can put those pieces of information together is that the central banks are printing like crazy. This is a highly liquefied market. When you have money out there chasing stuff, things don't have to make sense, right? So we're back to that old maxim, the markets can stay irrational longer than you can remain solvent. Right, we are at a highly irrational moment right here. So this is all good stuff, and my analysis of it all, Robert, comes back to this is time to be safe and think about safety. This isn't time to get greedy. This isn't time to chase. This is time to really understand that we're in a highly unsustainable blow-off topping formation here, and that there's a very high chance of a correction coming.
Our mutual friend, Mr. Robert Kiyosaki, talks about when the checkout gal at the grocery store is telling you it's time to buy real estate, that's the time to get out, right? And we are kind of at this faux prosperity, but if you look beneath the numbers, we're adding jobs. They're not the right jobs. It doesn't feel like people are wealthy, but supposedly, things are all good. What are the things you can do, Chris, to be safe, to take some of those simple measures that can have you live another day?
Well, I think that just financially, people need to have a plan at this point in time. So here's what my plan looks like. I've got a lot of gold and silver. I've been an investor in that since 2001. I've got plenty of that, and I own my real estate outright, free and clear. So I've got that box checked off. Next, I'm building cash and a plan. So people need to have a plan. I have, in my area, I have real estate that I've got my eye on. It's productive real estate, whether that's for timberland, farmland, high-value commercial properties. None of them are at prices I'm personally attracted to at this point, but I've got a plan because my theory is that we're going to have a much better pricing opportunity in the future. That's a euphemism for we might have another correction, like 2008, only this time I think more severe. Of course, we'll rebound from that again, and the trick will be controlling my emotions and being able to buy and pull that buy trigger when it's going to be very hard to do. So that's why I have my plan developed today. I know what price I'd be willing to pay for a variety of things that I have my eye on, and I'm going to be patient.
That's such a good point because people get emotional, and when the market is high, people buy into that fervor. When there is assets on sale, we always say people love to buy stuff on sale, just not real estate, because it always seems like it's going the wrong direction.
Yeah.
But you're right. If you can figure out that plan in a sane moment and then keep yourself emotionally ready to go forward, then you'll probably do all right.
Absolutely. In the throes of a crisis is no time to develop a plan. At least not for me. I can't do it. My vision closes down. It's very hard to understand where we're at. People will be very scared. And that's really the moment when the most fortunes are made. It's possible we could catch a falling knife and be wounded in the process, but listen, you got to be in the game one way or the other.
Now, how is it that you keep your pulse on everything? Because you're looking at a lot of stuff, and have you been naturally attracted to the financial markets? Or tell us a little bit your story.
Well, somebody asked me recently, what do you do? And I said, I read.
Yeah.
That's what I do. That's really 90% of my job. So I'm reading very widely. I don't trust any one source anymore. I really don't trust mainstream media. A lot of bias there. So I've got a very diverse collection of blogs, personal information sources, major outlets. I try and sift through all of that and figure out what the real story is under that. And my background is I'm a scientist by training, PhD in life sciences, then got an MBA. So I like numbers, I like data. But I understand that numbers and data don't actually inform most people's decision-making process.
Right.
We're humans. So I have to understand the emotional side of this story as well, the psychological side. I'm trying to put all of that together and really understand that we're at a really extraordinarily unique moment in human history. Not U.S. history, human history. And once you can get this lens on to understand really where we're going, there's going to be extraordinary disruptions and challenges and extraordinary opportunities as well. But My tagline is the next 20 years are going to be completely unlike the last 20 years. So for anybody who's saying, well, this is what happened last time, I'm going to do that next time, I don't think that's the right formula this time around.
Excellent. Well, let's talk about the new book. Your new book is called Prosper. You and Adam Taggart have put together a great work here. Tell us about Prosper.
Well, sure, you mentioned the crash course. That's the seminal work, the original work. That was problem definition. Hey, people, here's all the things that could go wrong. Prosper is solution space. So what we've done is collect all of our personal information. Adam and I have undergone huge transformations in our own life. Plus, we have thousands of people who come to the website, including reader stories that some of them have shared. So this book talks about, what do I do? So if you see the world changing like this, what do I do? 8 key chapters in that we talk about financial capital as one of the most important forms of capital. Everybody's familiar with that. It's a big chapter. But there's 7 more that follow that talk about other forms of capital that people can build.
Yeah.
Right? Social capital, very important. You can't buy it, but you need it. Right? So, and social capital isn't just how many people I know, but how well do I know them? And who can I really rely on and who can I trust? So building that social capital, very important. We have a lot of steps for how to go about doing that. Living capital. Adam and I both transformed ourselves physically. I'm 30 pounds lighter than I used to be. My body is my living capital. But if you came to my house, you'd see I have a pretty big garden and a nice orchard. And I'm building the living capital around my property because it's beautiful and it's fun. But in certain future circumstances, it could be very valuable to have an intact, highly vibrant soil structure on my property. So that's an example. We have 8 forms of capital, and the only other one I'd really like to highlight at this moment is emotional capital.
Oh, wow, okay.
Right? A lot of people overlook that one, but to me it's the most important one. If you don't have emotional capital, you're going to be ruined. Most people will not be harmed by the next economic downturn. They'll be harmed by how they react to it. So one of the stories we have in this book is about 1989. USSR dissolves and collapses. The Berlin Wall comes down, and Russia reverts back to Russia and all these satellite states. In the 8 years from 1989 to 1997 in Russia, after the collapse of the Soviet Union, 54% of all deaths recorded in Russia were from alcohol. Now listen, they're heavy drinkers in Russia, but 54% is off the charts.
That's a bunch.
4% is a normal figure. What happened was Dmitry the pipe fitter lost his job, still lives in government housing, still has government food. He's not on the street starving, but he lost his will to live because he couldn't be the pipe fitter. He wasn't providing and protecting. That also happened to be, in Russia, the most exciting period of capital formation in its modern history. People got fabulously wealthy during that period of time. Maybe not for reasons we say are admirable, a lot of cronyism, a lot of corruption going on, but at the same time, it still highlights that this was a period of rapid change. Some people couldn't manage that change, and they drank themselves, in some cases, to death. Other people saw the change coming, surfed that wave, and got fabulously wealthy. So the difference between the two was their emotional outlook, period.
Well, and that's going to be critical in what you're talking about, which is the next 20 years is so different, right? For the last 10 years, Brian Tracy has talked about the average person starting today isn't going to have just 5 jobs, but 5 different careers over their lifetime. The senator last night talked about how the average career today is under 4 years because everything is changing so fast. So having that emotional capital and then the intelligence to know what to do with it, right? That's going to be probably the key.
Absolutely it is. So for example, today, if I worked on an auto line and I lost my job, the very next thing I'd be doing, starting that afternoon, would be learning about robotics, right? Because I might not be the guy who manufactures and sells the robots, but somebody has to service them. Somebody does have to sell them. There's a whole new career out there, but you have to have the ability to adapt and shift. And emotionally resilient people have that capability to switch directions. And those are things you can actually learn. It's not like, some people are good at it, some are bad. They're tips and tricks and things you can do to build that up and begin practicing it with it. And our message is, do that now while the time is still, let's say, generous to allow you to be able to do that. The time to begin doing that is, again, not when the crisis is upon you, because you're going to be too busy surviving.
The book is called Prosper, How to Prepare for the Future and Create a World Worth Inheriting. Chris Martenson, thanks for being on the program.
My pleasure, Robert.
You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Memphis is famous for being the home of the king of rock and roll. but it's also the king of cash flow. If you're looking for affordable cash flow properties, it's hard to beat Memphis. Get your portfolio rocking and more cash flowing your way by calling Terry Kerr at Mid-South Home Buyers. Terry's the king of turnkey properties. Contact Terry through the resource section at realestateguysradio.com. And be sure to order Terry's tips for turnkey rental property investing report. It's free. Just send your request to turnkey at realestateguysradio.com.
Hi, this is Patrick from Paradigm Life. I've recently written an ebook called The Perpetual Wealth Strategy. The ebook discusses one of the best investments, real estate, combined with a financial vehicle used by the wealthy, many U.S. presidents, famous actors, athletes, and even Houdini himself. You can download the ebook for free in the resources section on the Real Estate Guys Radio homepage. Don't wait. Go download it now.
Hi, I'm Aaron Katusa, the chairman of Katusa Research. You're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. No matter how you listen, be sure to tell a friend about the Real Estate Guys. We're talking today about using and understanding your emotions as a real estate investor. And before we hear from our second guest, it's time to play Real Estate Trivia, your chance to win a prize, a great prize, by knowing today's Real Estate Trivia question. In just a minute, I'm going to give you the question, and it has something to do with real estate. You're going to give us the answer by sending an email to trivia@realestateguysradio.com. Include your name and your physical mailing address plus the answer to the question. Because if you're the winner, you're going to win an autographed copy of Prosper, How to Prepare for the Future and Create a World Worth Inheriting by Chris Martinson and Adam Taggart. Before we give you this week's question, last week on the Real Estate Guys, we were honored to have real estate attorney George Ross with us. We asked this: in addition to his worldwide real estate holdings, Donald Trump also owns a winery. Where's it located? Well, the Trump Winery is in Charlottesville, Virginia. Here's our real estate trivia question for this week. Most of the Las Vegas Strip is not actually located in the city of Las Vegas, but in another city. Which one? What's the name of the city that actually the Las Vegas Strip, the majority of it's located in? It's not Las Vegas, it's another city. If you know or want to take a guess, send us your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address so we can send you an autographed copy of Chris Martinson's great book, Prosper. That's today's real estate trivia question. We're talking about emotional capital and your emotional drivers and the emotions behind being a real estate investor. As an investor, it's important you get and stay educated about all things financial. And the man you're about to meet is responsible for educating literally millions of people each month as one of the largest financial newsletter publishers in the world. Please welcome to the Real Estate Guys, the founder of Agora.
Yeah, hi.
Bill Bonner, how are you?
Great, thank you. It's a pleasure being here.
Well, it's so good to have you on the show. So you spend a lot of time thinking and looking at what's happening, and we're at an interesting time now.
Well, we're especially interesting time now, and yes, I am especially privileged to be able to take a lot of time and think about it, which is very rare. And by the way, the people who are supposed to be thinking about it often are not thinking about it because they're paid not to think about it. And so I feel like I'm in a very special place right now.
Yeah, right on. So this morning, in fact, you were on a panel about the future of the dollar, which was fascinating. And you made a couple really interesting comments about just understanding value and what something is worth. Can you speak to that?
Well, no currency. The dollar is really just a piece of paper. But it doesn't matter if it were a gold coin; it still doesn't have any value unless you can buy something with it. So,
right.
Somebody you're marching across Antarctica, and somebody gives you a gold coin, it doesn't do you a bit of good because there are no stores. And what you can buy with it depends on how productive the economy is, and that's why in productive economies and rich economies, the currencies tend to be strong because the people are producing a lot of stuff, and with the existing currency, you can buy a lot of things. Now, where things go wrong is where the government produces a lot of money, paper money, and the economy declines. And then you get a situation like Zimbabwe, where everybody had 10 trillion Zimbabwe dollars in his pocket, but you couldn't buy a cup of coffee with it because there was no productive economy.
Right. So as we're looking ahead now, and we become a nation that is in a lot of ways less productive, and the productivity we hear about, the numbers we read, we maybe need to question. What's an investor to do?
Well, it depends on what an investor wants to do, and everything is context dependent. So if you're young, you want to get in a business, get in a career, and get started and get saving money and build capital. If you're not young, it's a different situation. It depends on how much time you have to build capital, or whether you're trying to protect it or build it or whatever. You have to figure out what you're doing first. And if if you have enough money, you can speculate. But if you don't have very much and you're counting on it for your retirement, you better hold on to it. So I don't know. I'm giving all kinds of crazy ideas to people, but myself, I like property because property doesn't go away. I try to buy it well, make sure it has a good income stream from it, and make sure it's something I like to have because price might go down a lot, and if I still want to have it, that'll be fine. So I like property, productive investments, real businesses that produce something that won't go away in a crisis. And I think everybody should be thinking that way. And even if you're thinking about stocks and bonds, well, you should be thinking about what's behind them. And what's behind a stock is a company. And the company you have to look at very carefully and see if it's the kind of company you really want to own, and see if you would still like to own it if the stock price went down by half, because that's what I expect will happen. And there are a lot of companies like that, companies that are good, that are producing dividends, that are making profits, that won't go away in a crisis. Those companies are worth having.
Now, Bill, what are the mistakes you've seen investors make when there's been times of change? Because everybody has an opinion of what to do. Do you hunker down? Do you build up? But you've got a long-term perspective on this. What are maybe some things you've seen people do wrong that they might have adjusted?
Yeah, well, I think what happens in a crisis is that people become very crisis sensitive, and they tend to react emotionally, and that's, of course, the worst thing you can do. We see it over and over in history and in my own life. Every time there's a crisis, people get frightened and they sell. Well, what you really want to do is sell before the crisis happens. When everybody's feeling very good about things, when they're feeling like everything is going up, and that's a good time to bail out, to hold cash and wait until everybody's feeling very bad, and then they're selling off things, and then you can get things at a bargain. I mean, there are no real secrets in the investing world. You buy low and you sell high, and so when prices are high, as they are today with stocks and bonds, mostly you don't buy, and when they are low, then you do buy. So just remember that rule. Remember, I told you so.
All right, that's great stuff. Let's talk about a little bit about the publishing business. My goodness, if there was ever a time that you better be plugged into some good thinkers, it's right now. And you guys reach a lot of people in a lot of ways.
Yeah, well, we actually publish. We reach 2.5 million people worldwide. And we're the biggest publishing organization you never heard of.
Yep.
But we are also very unique in that we are paid by our readers. We're not paid by advertisers, and we're paid by our readers to try to look at, study, and figure out what's really going on. That is rare because most publishing enterprises are supported by advertisers, and those advertisers tend to be the big corporations that profit from the current system of credit expansion. So we have a very different message, a very different critique. We're doing it worldwide. It's based fundamentally on Austrian economics, which I think is fundamentally the right way to look at economics. And so, so I think that we have a big role to play in the future because we're the only people doing this. And I suspect that this will be the time that it needs to be done. When the crisis approaches, which it is now, I think people need to hear this message.
All right, good stuff. Well, we sure appreciate your time today. Great to have you on the show.
It's a pleasure. Thank you very much.
All right, there's Bill Bonner, ladies and gentlemen. More when we come back from the Real Estate Guys in Las Vegas, Nevada.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Hi, this is Steve Forbes. You're listening to the Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the program. My goodness, my emotions were sure all over the place as I was listening to both Chris Martenson and Bill Bonner.
You know, these are two of the biggest brains in the business. They are really well respected, well followed. I started following Chris Martenson, and then, every time I think I'm getting one up on Robert Kiyosaki, right? We bring him the book, Jim Rickards' book, Currency Wars, and think, I'm going to share this book with Robert, right? And Robert's got it all over the place and he's reading it. So he's been following Chris Martenson for quite some time. In fact, even had Chris come out to do one of his 3-day events, which we unfortunately weren't able to attend. Normally we're there, but we were busy putting together our annual investor summit at sea. So now I finally have the chance to sit down with Chris face to face and have a conversation. And the conversation off mic was probably even more compelling than the conversation on mic, which is often the case. And I was able to show him on my phone, hey, Chris, I really do listen to your podcast, because I had it in my podcast feed. You could see all the green check marks where he could see that I'd been listening. But I really do believe that you have to be plugged into people who are thinking about what's going on in the world at a high level. And the great news for this generation is we are more connected, more plugged in to thought leaders. Listening to Bill talk about what he's done with Agora over the years, and they've been at it a very, very long time, way before I was ever working with you, way before I even got into this space. I was already a reader of Bill Bonner and didn't even really realize it, and then I went back and looked at some of the books on my library, and I'm like, wow, I've been listening to this guy for quite some time. He made sense to me even before I really understood the fundamentals of what he was saying. But today, everything is moving so fast and change is happening so quickly. That's the bad news. The good news is that there are thought leaders like these guys available that are thinking about it, putting out great content, making themselves available to guys like us so we can have a real-time conversation. And I just encourage everybody to invest the time to really be paying attention to what's going on. It doesn't mean everything everybody says is 100% right or accurate. You don't know. You discover that over time, who's right more often than they're wrong. But at least it stimulates in your own mind the thoughts, and it starts making you aware of the things that you can see every day in the news and what's going on around you. And then you make strategic decisions about how you're going to respond.
Well, and, as Bill Bonner mentioned, it's always dependent upon context. What are you looking at depends on your context. If I'm interested in, say, a far away real estate market, if I'm actually thinking about going there, maybe vacationing there, maybe spending 3 months a year there, maybe moving there, that's different than if I'm just casually wondering about what the market's like a half a planet away, right? The context is different. Right now, it's emotionally charged in the media because we're in a political season. And so when an article comes out, when you're reading it in context. So if it's about the side that you're not for, you're charged negatively reading it. And if it's about the side you're for, you're charged the other way. So I just thought that what connected these two interviews in my mind was they both brought out how important it is to keep your emotions in check and to realize that we are emotional beings.
Yeah, I like the way Chris referred to it as emotional capital. And I started thinking about that as he said it. I thought, really, what is capital when you really break it down? You hear about human capital, financial capital, now emotional capital. What is that? And to me, capital is a resource that can be invested for gain. And the idea, could I invest my emotions for gain? And I think the answer is yes. I think Bill made it clear that it's how you react. It's maintaining control of your emotions, as we talked about extensively at the top of the show. And if you really look at the biggest mistakes you've made in your life, probably you've been a little irrational. And the old quote, I think Chris mentioned it, markets can stay irrational longer than you can stay solvent.
Right.
It's important for you not to get caught up in that irrationality, but it's also important for you to understand it. And this is especially true this year. We have the most polarized, most emotionally charged, to your point, Robert, election cycle probably in modern politics. And with new media and conventional media and the ubiquity of media, everybody with a device in their pocket, the fact is everybody's going to be more plugged in to what's going on than ever before. And we know in our space, it's going to be hard to have conversations with people because when you're trying to talk about, well, how this policy might affect, say, for example, real estate, interest rates, mortgages, employment, and you begin to have a comment on that, all of a sudden you've polarized somebody because that policy is being put forth by somebody who they're for or they're against. And therefore, when you're emotionally charged, you can't hear anything. If the bad guy says it, it's bad, out of hand. And if the good guy says it, it's good. No questions asked. And that's foolish. You have to really be willing to think critically. And I think that there's more of that happening right now. I think people are really thinking independently. I think for the first time in a long time, I think people are really feeling like there is a choice. There's a divergence between the two. They're not just two flavors of the same ice cream, if you will.
Well, I think how that applies to you as a real estate investor is when we go through difficult times, and both of our guests are preparing for difficult times ahead. Not doom and gloom. It's not the end of the world, but it's a change in the world. And in order to navigate any change, you have to be steadfast about who you are. And the emotions come up when you're thinking about providing for a family, when you're thinking about sailing into economic uncertainty. It's emotional. And you want to have that capital of emotion to make sure it steers you in the right direction. But at the same time, recognize when you're doing something based on emotion. You get caught up in a property or a deal. And we've seen this happen where students will be pursuing a deal so far and so fervently that they get down there and they're like, I just got to make it happen. And oftentimes we slow them down and say, well, now let's just step back for a minute. Why is it that what are you trying to accomplish? What's your big why? And before they just, you know what, I really got caught up in the game. It's not even that good of a property.
Some of the hardest things we've done is walked away when we've had substantial money hard in a deal. Because as we continued our due diligence, it was going to be throwing good money in after bad. And that's a hard call to make. You know, you're sitting there looking at real money and think, I've got to save this. You know, one of the worst injuries, I'd like to dirt bike, or at least I used to before I racked up my body so bad. I still like to do it, but I just don't do it because I'm smart enough to know that that's probably not smart. But, you know, bought myself a new motorcycle. It wasn't brand new, but it was new to me. And I was excited about having it. It belonged to a former pro motocrosser. And I'm out there, you know, jamming around in the mud in a February rain, right? And so I go off this jump and I completely lose traction coming off. And if anybody who knows motorcycle riding or jumping, it's called doing an endo. That means your rear tire comes up, your front tire dives, and you're going to face plant. I'm on this 45-foot jump coming down, and I decide to myself, I just bought this bike. I am going to save this. I should not have tried to save it. I should have ditched and lived to fight another day. But instead, I face planted. The bike came up around me. It pulled my right leg out of the hip socket, broke my hip. I mean, it was just horrific. And what did I saved like an $1,800 motorcycle, kind of. I mean, the motorcycle did better than I did.
Yeah.
And now here I am all these years later, 20 years later, and I'm bearing the brunt of that emotional decision, trying to save something that I should have abandoned.
Look at how many people in the crisis in 2008, 9, and 10 hung on beyond hanging on to properties they had no business economically hanging on to, but for whatever reason, they had that emotion around, well, I'm a person of honor, I make my payments, right up until they just couldn't. And then rather than the eventuality being you're going to lose the property, that's what happened to millions and millions of people, but you're going to still have a little cash. They went through all their cash and now they had neither.
Yeah, right. I mean, and they did that in a valiant attempt, a foolish but valiant attempt to save their credit score.
Right.
And the irony of it is your credit score will repair itself a whole lot faster than your balance sheet will with a whole lot less effort.
Right.
It doesn't take much. And so that becomes this emotional thing where people are making these irrational decisions. I mean, back what we were doing, and if you dig way, way back in the archives, you can listen to some of those shows. You know, we had a lot of conversations about that. And there was a lot of discussion about the emotional baggage that people were carrying. A lot of people walked away from the space. And you could make the argument back then, of course, in hindsight, it's painfully obvious for the people that it would have been a great time to step into the market and continue to invest. The way to save or redeem your losses from the crash would be to continue to invest post-crash. And of course, the 8 years from the crash until today have been really good for real estate and real estate investors who chose to stay in the game.
So what do you do with all this great information? Well, I think there's a couple key takeaways from today. First of all, just notice when you're becoming emotional around real estate, right? When you go to a movie, when you watch a commercial, it makes you cry or makes you laugh. That's emotion. That's great. But when you're getting around real estate and real estate events and people that are doing deals and salespeople and all that, just be aware. Be aware if you're getting hyped up, being aware if you're buying it in, and then think about that emotional capital. What does that look like for you? What emotional capital do you have? And And here's part of the issue around that is that we have only so much energy as human beings. Our emotions are the same way. If you go through a really emotional period, say you start your day, something happens and it's just an emotional thing, it drains you for the rest of the day emotionally, just like any other capital. So we have to use our emotional capital wisely.
And we have to replenish it.
And you have to replenish it, right? We know people who easily seem to have plenty of emotional capital because they're always flying off the handle and they're right. And you see people that barely ever seem to be emotional. And somewhere in the middle is the balance. You've got to let it out. You've got to go there. You've got to get deep. But at the same time, you've got to be rational as well.
Well, I think a big part of that is your network. You know, we're big on that. We take a lot of pride in being extremely connected to super smart people. That didn't just happen, right? That was a strategic decision that we put a lot of effort into coming out of the crisis because we recognized that the next time something went on, we wanted to be a lot more plugged in than we were. And if you go back and look at our history over the last 8 years, you know, largely mission accomplished. Not that we're done, but we're constantly out there on the road, getting into relationships with thought leaders, asking questions, and we do our very best to bring as much of that information to our listeners as we possibly can. But more than that, we look for every opportunity to create environments where you can meet these very same people that we do. You can hear from them. That's why we invite you to come to these events we come to. That's why we put together events and invite the people that we do. And so we encourage you, when you have the opportunity to come to a live event, whether it's a Real Estate Guys live event or one that we're promoting that's third party, really encourage you to come out there and listen to these people. Get in an environment where you can focus and listen, build relationships, ask questions, and get plugged in.
If you want to hang out with the Real Estate Guys, we'd love to see you. Coming up the 16th and 17th of September, it's the Secrets of Successful Syndication. The next weekend in New York, we'll be at the New York Capital Summit. In October, we've got our amazing sales event, How to Win Funds and Influence People. We'll also be at the New Orleans Investment Conference, and we'll be at Planning for Prosperity. All those things on our website at realestateguysradio.com under events. Big thanks to Bill Bonner and Chris Martinson for their incredible contributions today. We've got a great show next week and an incredible guest the week after that. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.